Hey everyone, it's your girl, hashtag JLoan. I'm coming at you this Tuesday from my house, from my confined and quarantine bedroom. Yes, your girl this weekend on Saturday started to feel not good, and I just separated myself from the world and obviously found out that I had COVID, and so I've been kind of locked up away from everybody and just kind of confined to this room. Thankfully, prayerfully, and blessfully, my whole family's doing fantastic because I separated myself right away, and I'm getting much better. I'm on my way up, but I didn't want to skip a week of Mortgage Tip Tuesday because I was a little down. So you get me in the raw. No work clothes, no makeup, no anything. This is just me coming at you because I felt the information that I wanted to bring today would be very helpful to help you through your mortgage journey, whether that be today or 5 years from now. Obviously, unless things change, which is in this business is ever changing. So before I move on, today's National Daiquiri Day. So go ahead, drink responsibly and have some fun with that. And then tomorrow's National Hot Dog Day. So if you pair the two, seems like you got yourself a great meal. All right. I'm going to get ready to share my screen here. As what I want to talk about is reviewing and understanding your loan estimate. So this video will be a little longer than normal, but I promise you that it is going to be worth your while if you're going through a home loan right now, or if you're getting ready to go through a home loan. This is the most important document that you should review when you receive your initial loan RESPAs. Okay, I am viewing Lending Tree's website here, and the only reason why is they have a really good breakdown of the loan estimate that doesn't have true true information on it, and so it'd be easier for me to share without putting some real stuff on there. Okay, but this is what your loan estimate looks like. And in today's market, where rates are all over the place, the market's very volatile. Within minutes, your rate can change from what you've been quoted to what it actually is. You're looking online and you're speaking with a lender and the rates are all off, and you're like, why are your rates so high and they're so low? This loan estimate really tells you everything. And so if you don't understand what you're reading, then it's not going to help you be very smart about the biggest financial decision that you will mostly make in your life. Okay, so I'm going to review this with you line by line so that you understand, and I'm going to do my best to not cough while I'm doing this. Okay, so your loan term number 3 is, it will say whether it's 15 years, 10 years, 30 years, and then it'll say what the purpose is. This is a purchase, or is it a refinance, or is it construction, whatever the purpose of the loan is. And then your product, this is where it tells you if you're in a fixed rate or if you're in an adjustable rate. Then your loan type, is this a conventional loan? Is this a FHA loan? Is it a VA loan, jumbo loan, construction loan? It will tell you that here. And then most importantly, is your rate locked? So typically my borrowers from me will never receive a loan estimate that does not show that that their rate is locked. You will receive fees estimates from me before we even get here, and those are not locked. But a loan estimate, I send them locked. But most lenders, they don't. They just quote you, and the market is going all over the place. And then when you come back and you're like, hey, yeah, I wanted that rate is no longer available. You don't want to be in that position. So if you read this line and it says no, and you wish to proceed with them after reviewing this, you need to contact them right away to make sure that they lock in that loan before rates adjust. Okay. Number 2 shows the date issued, which obviously would be today's date, the name of all the borrowers on the loan, the property address that you are purchasing or refinancing, and then the sales price of the home if this is a sale. and then it'll go into your loan terms. This is where things get a little bit deeper, where you have to pay really close attention. It'll go over your loan amount, your interest rate, and then your monthly principal and interest only. It does say, can this amount increase after closing? You want these to say no. You don't want your loan amount to go up. You don't want your interest rate to change. You don't want your principal and interest to change either. But of course, if you're an adjustable rate mortgage, then of course this may say yes, because it will change later down the line at some point. Now, prepayment penalty, this can say yes or no. Typically, you want it to say no, because a prepayment penalty is just that. It's telling you that if you decide to pay this loan off early before a certain time frame has elapsed, then you will owe the lender this fee in conjunction with your actual payoff. So it is a charge that doesn't do anything for you. So yes, there are loans that do have those on them. I don't know many. Back when I was a broker in the subprime world, we had plenty of prepayment penalties, but I haven't seen them a lot lately. So just pay attention to that so that you understand what that term is, okay? And then balloon payment, of course, you want this to say no. This is basically stating that 5 years, 10 years from now, the lender can't come to you and say, now you owe me the whole balance in full right now. You don't want that, okay? Next section is projected payments. And this is, it says projected because of the fact that the only thing that is ever fixed on your mortgage loan, if you're in a fixed rate mortgage, is your principal and interest payment only. Everything else can adjust up or down. And that's your estimated escrows, your taxes, your insurance. All of that can fluctuate throughout your whole life of your loan. So I hear it all the time. You know, why did you guys change my payment? We cannot change your payment. We can change to help offset the money that we pay out. So if we've only collected $5,000 for your taxes and your tax bill comes $7,500, well, now you owe us $2,500. So it's very important to really pay attention when your county sends you your estimated tax assessment for the year before tax bills come out in October. It's very important for you to read that and not just throw it away, and be very aware of, are you on track this year? Because if not, when we pay those taxes, we're going to come back to you and say, hey, you have a shortage. Now you owe us money, and we're going to increase your monthly payment. Well, if you don't want that to happen, you have to stay on top of your escrows, and you can view this on your statements online, and you can add extra money into your escrow to avoid a large lump sum of money coming out of your pocket that you were not prepared for, okay? So that goes over years 1 through 7. This loan has some mortgage insurance, and so years 8 through 30, you'll see that mortgage insurance not on there. Then it breaks out your taxes, insurance, and assessments. Your assessments would be like if you had HOAs. A lender will always quote them here, but no lender pays your HOAs on your behalf, okay? So it says property taxes and homeowner insurance. There's an X on it, and it says, is this an escrow? This one says yes. If you did not plan on escrowing, then this should say no, and you want to make sure that your loan officer knows this so that they can get this changed for you and make sure that your rate is reflected correctly, because most times when you don't escrow, there is most lenders have a fee associated with not escrowing. So you want to make sure that that's now on your loan estimate. Now, keep in mind, conventional loans, 20% or more equity, you don't have to escrow. All other loans, you have to escrow. There are some ins and outs about it all, but this video would be way too long to discuss that. So just discuss the options with your loan officer. Then you have your estimated closing costs, which is in bulk. And then you have your estimated cash to close, which is, this is the amount of money that you need to bring to closing. I'm going to break this 8054 out on page 2 of your loan estimate, which would be the last page that we go over. So if you look here, section A is the most important part that you want to pay attention to. because this section is what tells you, is the lender charging me to get this interest rate? Okay, all lenders have their own fees for underwriting or processing or application, whatever those are. They have those fees, but in conjunction to that, to get that great rate that you see online or whatever you saw, they could be charging you a fee. And that fee would be right here where it says points, which this one only says 405. It's a very old loan estimate, but, and again, these figures are not correct. But this is where you would be able to see if you were being charged any points. So if the lender basically told you that you were just getting this fantastic rate and you didn't have any fees, this right here would tell you whether they were telling the truth or not. Okay. Now, section B shows services that you cannot shop for. Appraisal fee, credit report, your flood certificate, tax fees, these tax research, all these things are things that you can't shop for. And these all are different from lender to lender, but most of the time they're still the same. And then you have services, letter C, that you can shop for. If you're required to have a pest inspection, if you're required to have a termite inspection, if the home needs a survey, and believe it or not, your title company is something you can shop for. I know it's on your contract and it's just given to you, but you have the right as the buyer to choose whoever you want to close your loan. So just keep that in mind. You hold the power, okay? Then we're going to go to section E. These are your recording fees with the state. Again, those can range. If you have any transfer taxes like Florida has, Texas doesn't have them, but Florida does. Letter F is your prepaid. So all loans have prepaids on them on a purchase and a refinance. So one of them is your homeowner's insurance premium. Your homeowner's policy is paid 1 year in advance. So of course, this is wrong because we collect 12 months up front. So if you close in July, your premium for the next year is not due till July 2023 because we'll pay that, we'll collect it at closing, okay? And then you have something called prepaid interest. Mortgages are paid in the arrears. So if you closed in July, your first payment isn't until September 1st, but September pays for August interest. So when you close in July, whatever day that is, it will be whatever day you close through the first of the next month. So the earlier you close in the month, the more days of prepaid interest. The later you close in the month, the less days of prepaid interest you will pay. Okay? Then section G is initial escrow payment at closing. Now, of course, if you're escrowing, these will have numbers in them. Sometimes they fluctuate from 2 to 3 on a loan estimate. And your property taxes will also show roughly 3 months. Now, this can get a little complicated. I don't know if I want to get into it, but I am, just because I want to be very thorough. This section right here will look different at closing because of the fact that property taxes on an existing home, somebody owned that home before you. So if you were closing today, July 19th, from January 1st through July 19th, you didn't own that home. And so why should you pay a full year of taxes at the end of the year when you really only own the home for half of the year? So what happens is the seller will credit you for the portion of the time that they own the property, okay? And what we will do on your closing disclosure is we will reflect the proper months to set up your escrow account correctly. But again, it's kind of a wash because you'll see more months on property taxes, but then you'll also see a credit that will go over all of the time that you didn't own the property. Okay, it can get a little bit more complex. Again, speak with your loan officer to truly understand that portion. And then you have your title's owner policy, which is letter H. Now, on every purchase, I always recommend speak with the title company about why you should get an owner's title policy. Keep in mind, a lender's title policy protects just that, the lender. And an owner's title policy protects you in case 10 years from now, the title company that closed your loan maybe missed an existing lien against the seller who sold to you, and now it's tied to the property. You want to sell your home and you can't. You feel tied, you don't know what to do. Well, this owner's title policy will help you and protect you, where now the title company has to resolve these issues without charging you a fee. So it can get a little bit more complex, but again, speak with your title company about that. Okay. So when you come down, you'll see your total closing costs. This was the number at the bottom of page 1. And then you'll see any down payment, whether that's 3, 5, 20, 50, whatever you decided to put down, your down payment. And then you'll have your deposit, which is anything you've already put on the contract, such as your earnest money deposit, any option fees, any additional money, whatever you put, that should be reflected right here. And then if you have any seller credits, adjustments, or anything, that will be reflected, which leaves you with your $16,054 out of pocket. So again, this is really just to help you thoroughly kind of go through your loan estimate. Keep in mind, this is an estimate. So, but there are things that lenders cannot change from beginning to end, and that's their fees. Okay. When we give a loan estimate, most times title companies haven't given us their fees, and so we still estimate those. So those can be up or down, but if you're working with someone who's been in the business for a long time, they're typically very, very close to what your escrow, what your title fees will be, as well as all of the other fees. You're normally pretty close. So I hope this helps you. Keep in mind, I hear it a lot, my loan officer changed fees on me at the end, and it does. I've seen it happen where maybe they misquoted your taxes on purpose to be competitive or show you that your closing costs are less. But keep in mind that property taxes and the bill for that is all public information. And so it's very important for you to do your best due diligence up front to get with your realtor and say, hey, what are the taxes on this property? Give me the unexempt taxes at worst case scenario, so you can actually see if what they're quoting you is correct. And, we live in a world where, I hate to say, gosh, you got to double check, but this is one of the biggest purchases of your life. So I want you to trust the person that you work with wholeheartedly, but I don't want you to be afraid to ask questions, and making sure that everything is in line with what you and your family planned for this purchase, so that there's no hiccups, there's no surprises, there's nothing later that's going to pop up that's going to hinder you from purchasing your home, cause frustration, tears. Nobody wants that. You don't want that. I don't want that for you. And so if this video can help you, I know it's long, but I take this time with my borrowers to go through this loan estimate to make sure that they understand it. And I do a video just like this for them so that they understand line by line, or I go over it personally. You deserve that type of service. So until next week, I know I'm going to be feeling better. I'm supposed to go on vacation, and I'm excited about that. I should be off of my quarantine here pending a negative COVID test on this Friday. And I just want you guys to be safe. I want you to be blessed. I hope this is helpful information. And until next week, just stay safe. All right. Talk to you soon. Bye.